I think it's a retest, at least the makings of a retest. First of all, we're not back down to those lows, right? We finished last night in the S&P 500 about 0.5% above where we closed Monday, right? So we did have that big rally on Tuesday. Yep. We do have a year-to-date chart of the S&P which shows last week's low and where that is. So that's 27.28. And what's interesting about it is how much time the market has kind of spent this year, kind of whipping above and below that level. 27.40 is supposedly the level where the most volume has taken place if you looked at the stock index futures. So, you know, there's a big argument going on in the market around just general level of value for the market. So, you know, what do you look for at this point? Look, earnings is not on a aggregate basis been much of a help. In fact, all year, it's been just the premise that we have really strong earnings. It's supporting the valuations of the market, but it's not really, at this point yet, a catalyst. Maybe after we get out of earnings season, that's going to be kind of rounding into shape as we look at 2019 numbers, assuming they hold up. So what to watch now? If it's going to be some kind of a retest of those lows, first of all, this is not unusual activity. It's exactly how it always happens when you have a big shock like you had last week. You have these kind of rallies, air pockets,
aftershocks,
a lot of anxiety, a lot of emotional trading, and a lot of technical trading. So I think that's where we're at right now. Now, the rest of the world, I mean, Shanghai's in a bear market. The German market is down 15% from its high. So a lot of that stuff that's been a drag is still there that was there last week. So that's
Shanghai
a lot of stuff we have to sort out.
now, you were saying?
28% from its highs, the Shanghai index, yeah. And really, all the world markets don't really look that great. So the question has always been, and by the way, the NASDAQ was down 2% yesterday. And so a lot of times this year when we've had a little bit of a back off in the market, the big tech stocks were just going up for whatever reason. And they just kind of took up the slack.
People were hiding out in those stocks.
That seems to be in some kind of an unwind right now. So right now, I do still think we're in this mode. You want to see if we do get these further sell-offs, see if there are less intensity. The volatility index did not nearly get up yesterday where it got up to last week. It got up above 20, but last week we're in the high 20s. So it all is kind of according to this cadence of anxious October trading, trying to see if there's a low in the area.
It's looking like, I don't want to say it, but it's kind of looking like garden variety, things we've seen before.
It's almost to the point where you want to say.
It's almost too much where it can't be, right.
Yeah.
Katie Stockton, actually Kinahan will be on at 8 o'clock. We talked to her last week. She thought that, you know, it seemed like we were at the beginning of something, but she pointed out what you have, that it was a stealth correction.
Yes, for a while.
And it was sort of more that we were very oversold. We were toward the end of it, perhaps.
Yeah.
But
and you were, and so I think that, you know, the downside is if all you got was a response to being really oversold and we bounce for a few days and then you give it up, it's not great. But you want to see how it unfolds from here. You know, I've talked about that 2014 analogy, which was one of the few October V bottoms that we've seen in a while, and the year-to-date performance of the S&P really mapped very well to 2014, and the year before, 2013 and 2017, were very similar in terms of being low volatility melt-ups. So, you know, that would be the upside case, is that basically we've seen the worst and it's kind of up for a month and a half from here.